German industrial production increased by 2.9% in August compared to July, more than anticipated. Now, analysts attribute this to higher output from the automotive sector, while Reuters polled analysts forecast an increase of 0.8%. Joining me now to discuss this and other global stories is Head of Investments at Sankara Global Investments, Efosa Aluyi. Efosa, good morning. Welcome to the show.
Morning. Thanks for having me.
Most welcome. All right, let's begin with oil prices extending gains and lifting Brent crude towards $80.
I mean, that's clearly a reflection of all of the tensions we're seeing in the Middle East. Just last week, as a matter of fact, crude oil prices rose about 8%. That's the most we've seen in about a year. So I think the concern really is around the fact that that conflict is likely to get wider in the Middle East. We've seen a lot of escalation over the last couple of weeks, and that doesn't seem to be abating in any way, shape, or form. So those concerns are what you've seen essentially weighing on markets. Also, we're seeing that bearish sentiment that really had seen before this market started to turn about a week or two ago. We're seeing that beginning to reverse. So a lot of bearish positions that had been amassed on the back of the fact that OPEC Plus was actually slated to bring back some output into the market in the month of October and also in December. And also, obviously, demand weakness in China was also a concern. So we saw that bearish sentiment. However, this geopolitical situation, is creating the sort of uptick we're seeing in crude oil prices. It's, however, important to note that any de-escalation really poses a significant downside risk for oil prices because the fundamentals truly remain really weak, at least in the near term.
Right. It's a bit turbulent at the moment. And of course, we could possibly see this spike up a bit higher, about $3 to $5 per barrel, if there is a retaliation from Israel.
Absolutely.
What are the chances of that happening, or we just have to wait and see what happens?
I mean, if we see further escalation, what then happens is that there's about 3.4 million barrels per day production from Iran will then be at significant risk. A wider conflict will then mean instability in that region. Not just the production in that region now, a lot of the flow through that goes through the region would also be at risk, and that could create significant problems. So Israel has obviously vowed to retaliate at a place, time, and method of its choosing. Really remains to be seen how it goes ahead and carries that out. But that risk continues to be a significant concern for markets, and that will probably create what I might call a solid floor for oil prices, at least in the near term.
And talking about markets, what implications could this possibly have on the local market in Nigeria?
Well, I mean, for us, crude oil is really like our main export, right? So the ability to take advantage of a situation where prices are on the ascendancy is very, very crucial. Over the last 3 years, crude oil prices have actually been sturdy, but unfortunately, we've not been able to take very good advantage of it because of our production woes. So until that is really dealt with and sorted out, it continues to prove to be a problem. I mean, if we're able to deal with that, it not only helps to improve revenue, it also will go a long way in helping to assuage all of these price stability issues, particularly on the FX front.
All right, that's very important, long-term effects there. Well, let's move on to Asia, and China's September forex reserves beating expectations. What do we have here?
Well, China has the largest FX reserves in the world, currently sitting about 3.3 trillion. The growth that we saw last month was essentially the third straight month of growth, and also the highest point we're seeing since December of 2015, really, at 3.3 trillion. If you look at what has happened, this has just been as a result of an appreciation, really, in the non-USD assets of the foreign reserve components of the Chinese reserves. The composition really is a tightly held secret, but we know that a sizable portion still is invested in U.S. Treasuries and U.S. bonds. That number has, however, come down significantly if you look at it over the last 5 years, but it still remains a sizable portion of those assets. Also, what we've seen is the fact that the dollar has weakened against the yuan and also, a basket of major currencies over the last month or so. And that's just on the back of the expectation that the Fed was going to cut rates, and then the actualization of the fact that the Fed went ahead to cut rates. So that has impacted, the value of the non-dollar portion of those reserves. And gold is a good portion of that. In fact, the value of gold within their reserves has risen from about 185 to about 191 billion, and it accounts for anywhere around 5% of its total reserve. So clearly, movements in financial assets really is one of the major things that has helped the push that we've seen in foreign reserves for China. I mean, nevertheless, the strength of the economy in terms of its strong current account position and all of that continue to push, its reserves upwards.
Yeah, it's certainly very impressive, and consistency seems to be there as well. I would ask you, what are they doing right? But I think you've touched on that. So let's move to Chevron selling Canada oil, sand, and shale assets. This is a big story. $6.5 billion.
Yeah,
what we have here.
I think this is just a continuation, really, if you will, of what we've seen a lot of the oil majors do, particularly with the Canada sands. A lot of them are actually looking to exit. A good number of them have exited. And this is just part of the grand plan for Chevron to really raise between $10 to $15 billion over the next 4 years. The idea is to be able to focus more when it comes to this oil sands or shale, focus more on the US and also their markets in Kazakhstan. Again, what this is also going to do for Chevron is also kind of provide some firepower, financial firepower, because right now it's embroiled in some, takeover or merger disputes with Exxon over Hess oil. And the backstory is that Exxon really does all of the production right now in Guyana, and that's a very new, exciting market. All of the joint venture operations there is operated by Exxon. Exxon owns about 40% of that, and there are minority holders. You have China Production, and you have Hess. Now, obviously, with the acquisition of Hess by Chevron, Chevron has an inroad into that market, and that's what Exxon is basically trying, to protect. I mean, the asset that Chevron is selling does about 84,000 barrels a day. That's just under 3% of Chevron's daily global production. So again, it's just this whole idea of Chevron optimizing its assets, freeing up cash to look at more lucrative markets at the end of the day.
So this is all very strategic for Chevron in the long run. What do we know about the transaction? It's all cash. When is it expected to kick in?
The transaction is all cash. Expected to close on the 6th of December. So it's an all-cash transaction that is expected to close on the 6th of December. Again, like I said earlier, that cash comes in to essentially boost Chevron's cash position to look at other ventures and look at ways through which it certainly can optimize the return on its assets across board.
All right, very impressive move by Chevron there. Well, let's move to Samsung posting disappointing third quarter profit guidance. We have to be careful. Yeah. It's not profits, it's more of the guidance around it. So what do we want to say about that?
I mean, I think the issue was the fact that guidance came in lower than what analysts had expected. The expectation was that we were going to see an 11.4 trillion won operating profit, but they are guiding to about 9.1 trillion. And that's 25% shy of expectation, and that's significant. In spite of the growth, I mean, make no mistake, they're still growing, but there are concerns about the pace at which they are growing, and obviously the sustainability of that growth into the future. I think a lot of the concerns come from its, the business that basically caters to chips in laptops and servers. There's a bit of a slowdown there. Obviously, the competition there is certainly getting stiffer, and Samsung truly hasn't been as aggressive as it has in the past in terms of holding on to that market share. So there are concerns around the fact that Samsung is truly unable to hold on to this market share, and that could create problems further down the road. So that's why we're seeing the sort of reaction that we are seeing in the market. But make no mistake, Samsung is still on very strong footing and continues to grow. The concerns really are around its positioning within that market and the sustainability of its position within that market.
All right. And it's fair to say that this is quite responsible to put this guidance out as well. Everybody gets to manage their expectations. But you see, on the other hand, we have German industrial production beating expectations at 2.9 rise in August, month on month.
Yeah, so I think it's important to then probably look at that number quarter on quarter. Where there's a lot less volatility, if you look at that number quarter on quarter, that production was down about 1.3%. If you look at the quarter ending August, if you also look at industrial orders, they are down 5.3% really in Germany. The struggle really have to do with structural difficulty around higher energy prices, the inability of the auto industry in particular to really scale up and ramp up EV production. You're also seeing weakening demand from China as well. That's a concern. So if you look at all of that, the industrial sector is still sort of bogged down. So that month-on-month number might be somewhat deceptive, really. If you look under the hood, you look at the trends quarter on quarter, there's still a significant slowdown that is happening there. And that's reflective in, the Q2 GDP numbers that we saw. It contracted 0.1%. I mean, so if industrial production is really growing, which is the heart of the German economy, output will certainly be, increasing. But we're seeing output continue to contract because if you smoothen that industrial production number out, it's really continuing to slow down, and that remains a concern for the German economy.
But is there any effect, if we look at this outcome, is there any effect for euro buyers? People want to know euro USD. Is this going to have any boost?
I mean, I don't think so. I think the major issue right now is what monetary policy is doing, right? It's what the ECB is doing with rate cuts and all of that. I think the entire market is really focusing on that now. So we're in an era of what you call some sort of monetary dominance. So the focus really is on what monetary authorities are doing and what the impact is likely to be. Not so much of what that data truly is with what's happening with the economy. Because ultimately, as monetary policy gets looser or easier, the expectation then is that these industrial production numbers will probably pick up over time.
And looking into the future, do you expect, you just said it might pick up over time, but is there an expectation that's likely?
Yes, absolutely. I mean, one of the major pain points really or concern areas is the weakening demand in China. We've seen a raft of stimulus measures by the Chinese government really essentially throwing the kitchen sink at the problem, trying to tackle that. The expectation is that that might not necessarily help them attain the sort of goals that they're looking at, but it would assuage all of this weakness in demand that we're seeing. And that should then trickle into, those countries that export very heavily to China. So obviously, Germany is probably looking to benefit from that. And then if you look at the situation with monetary policy getting easier and looser, that should also help, further down the road. So obviously, this is probably the trough of what we're seeing with industrial production in, the industrial heartland of Europe. But we do think that there's likely to be some improvement given the monetary situation and also the kind of fiscal support that we're seeing from places like China.
Makes a lot of sense. Very well put. Afosa Aluyi, Head Investments at Sankara Investments. Thank you so much for joining us on the Global Business Report. We'll see you again soon.